Ladies and gentlemen, good day and welcome to the Q4 and FY25 annual results conference call of PTC India Financial Services Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Priya Chaudhary from PTC India Financial. Thank you, and over to you, Ms. Chaudhary.
Thank you. Good morning, everyone. I'm Priya Chaudhary. I'm Head Investor Relations at PTC India Financial. I would like to take this opportunity to welcome all for Financial Year 25 Investor Call for a discussion on Q4 and FY25 annual results of PFS. Now, just to set the context for today's discussion, over the past 1 year, steadfast steps have been taken to steer the organization through a phase of stabilization. Significant efforts have been made towards resolving the legacy issues, institutionalizing internal processes, and strengthening the leadership and management team. These efforts are evident and are reflected in a qualification-free balance sheet, improvement in NPAs, revision in our rating outlook by ICRA from negative to stable, to strengthening our senior management through appointment of MD and CEO, DS and CFO, and Company Secretary in Financial Year 25. These initiatives will act as a stepping stone for a cautious and a sustainable growth going forward. As we look forward to Financial Year 26, we are guided by a clear strategic focus of delivering customer-centric financial solutions, expanding our presence in distributed infrastructure, diversifying our funding base to build financial resilience, and enhancing internal systems for greater agility. All these measures, along with the positive tailwinds in the infrastructure sector and continued focus on sustainability, augurs well for the organization. I will now like to introduce the top management team of PFS present in today's call: Mr. R. Balaji, MD and CEO, Mr. Dilip Srivastava, DS and CFO. Dilip has joined us recently in March 2025. Mr. K. Srinivas, Executive Director and Chief Credit Officer, and Mr. Abhinav Goyal, Senior Vice President, Finance and Accounts. With this, I will now like to invite our MD and CEO, Mr. R. Balaji, to share his opening remarks and insights on the company's performance. Over to you, Balaji.
Good morning, all. I am happy to be here sharing with you what happened in Q4 and the full year FY25. First of all, I would like to introduce Dilip Srivastava to you. He's joined us as Director of Finance and CFO on March 28th. And with this, one of the things which we have been saying earlier, right, our leadership team is getting strengthened. This is a significant addition to the team. And another senior person will be joining shortly. So with this addition, the leadership bandwidth is completely filled up, and going forward, this will give us the necessary wherewithal and management bandwidth to focus on the transformation journey that we have embarked on in this organization. The two things what I would like to say upfront is, the fourth quarter could be divided into two parts. Dilip and his team would be taking you through the financials. One is we continued on the process of transformation. We have restructured the organization into more agile. So the roles and responsibilities have been defined to ensure that our ability to serve the customers is enhanced. Two, keeping with our motto of enhancing systems and controls, we have created a separate operations department to ensure that post the sanctions of the loans, the monitoring and the regular covenant monitoring happens in a regular manner without any conflict of interest. So that's one thing which we have done. And three, whatever systems and controls which we have improved in other areas, which was a thing, we continue to focus on those to strengthen it. And this is evident by the fact that if you look at our annual results, the qualifications which were there come down, and there's no qualifications, and even the emphasis matter has come down significantly. This is what. Now, as far as the areas that could have been better, if you look in when we spoke to you in the last week of January after Q3 results, we said we got a strong pipeline. The pipeline was there, but possibly I overestimated the amount of business that we would do. As one was not from the infrastructure finance industry, we thought certain things would happen. We evaluated close to 1,400 crores of proposals. Out of the 1,400 crores, couple of proposals have got spilled over to the first quarter of this year. One proposal, which was a significant value, there was a delay in the processing. Consequently, the customer went with another leading bank of the country, although it was sanctioned at our stage. And finally, some of the proposals which were sanctioned, which were pending for disbursement, they got deferred to quarter one. So because of that, compared to the figures that we had said in the quarter four, in disbursements, we could not proceed. That's substantial under delivery compared to that. But on the other aspects, organization, we have progressed well. And more importantly, as far as the stressed asset is concerned, in the terms of the resolution of the stressed asset, one happy news is that one of the key asset is ILFS Tamil Nadu. In the ILFS Tamil Nadu, we are happy to say that the project has got investment grade rating from 2 rating agencies. And the lead bank for this project, that is Punjab National Bank, has written to RBI for their approval for converting to a standard asset. So once that, we expect that approval in the next few weeks. And once that comes, that will go away from the stressed asset at the stage 3. Secondly, one of the other stressed assets went to, we have proceeded on the resolution plan. In fact, initially after the thing, we received 18 expressions of interest, and finally on the 8th of May was the closed final date for submission of the bids. We got a significant number of bids. We expect the process to identify the winning bidder in the next few weeks, and therefore in the quarter 2, the entire proceeds would come. In the quarter 1, apart from finalizing of the winning bid, the winning bidder would also bid a EMD of 20%. Therefore, that would also go away. So with these two out of our gross stage 3 of close to 700 odd crores, the important thing that could happen is with these two cases alone, there will be a significant reduction in the NPAs, in the sense that we straight away close to around 280 crores would go away. That would be a significant thing. And as far as the NSL is concerned, we are happy to say that while we got a successful resolution applicant in the form, there wasn't multiple legal challenges against the award. The NCLT has heard it, and possibly the judgment will be given in the next few weeks. So out of the 686 crores of the total 4 accounts which accounted for close to 96% of the total 710 crores of gross stage 3, close to 405 crores is sorted out by September, and that's a very, very significant cleanup as far as we are considering. And the next thing going forward would be the only key one, that is Danu, and which we expect it to be resolved in the second half of this financial year. So that's what we are doing. And the other critical thing which has happened in the last few weeks is that to strengthen our IT capabilities, a new Chief Information and Digital Officer has joined, Siddharth Datta. Siddharth comes with a significant experience. He was earlier the IT head of Fincare Small Finance Bank and also the IT head of Northeast Small Finance Bank. So coming from a banking background, he would be able to add a lot of value towards overall of our IT system to make it more user-friendly, at the same time ensuring that the information security is highly maintained. Plus, we are also adding a few more key people in line with our focus on going into smaller loan sizes. So we are creating, like what was shared earlier, we are creating a new vertical, SME lending. Basically, this would focus on projects in the range of between 30 to 70 crores. The head of that business is expected to join in the third week of May. So with this addition, plus also a new director in charge of projects and operations in terms of lending, that person be coming in the first week of June. The entire management overall would be complete. In the sense, we've got a full-fledged CFO, we've got a full-fledged director for operations. Anyway, we have already got a chief credit officer, we've got a chief risk officer, plus a head of SME lending, and the new head of IT has come. With this, the entire management overall is complete. Going forward, we are also recruiting at the junior levels in the credit, risk and business development function so as to boost our revenue generating capability. So with this, we are strongly poised to go forward. Now leave it to Dilip to take you through the financials.
Mr. Dilip, you can go ahead. Sir, are you there, Mr. Dilip?
He must be muted.
No, sir, he's on talk.
So, hello. Yeah, so I would like to highlight that this time in our financials, there is no qualification. Last year, qualifications were there. That this time there is no qualification from the statutory auditor. That is a good achievement at the company. And in terms of total income, this year we had earned 638 crores against previous year of 776 crores. PAT has been 217 crores and against previous year of 161 crores. That is a 35% positive increase. I mean that is additional we have earned. In terms of return of assets, it has been 3.5%, 6% comparison to previous year of 2.7%. So that is a incremental 129 basis points. And gross statutory assets, again, that there's a reduction from 769, it is now it's 711. And capital adequacy ratio, so it is improved. It's a 15.65%. Its previous year of 43.07%. That is a additional incremental positivity of 16%. And net worth of the company has been improved, and it is now 2754 crores against 2538 crores in the previous year. So it's an incremental growth of 9%. So that loan assets it's a 4744 crores. So that as Priya Chaudhary already explained that our rating has also been improved, and we are taking up with the rating agencies as well. We are expecting that it will be further improved. And regarding that lending part, we have been taken up with the multiple lenders, and things are in the positive direction. We are expecting that we will be closing, financing with the multiple banks very soon, and our AUM base will also be increased. So, Priya, over to you.
Yeah, thank you, Dilip. I think I will now like to circle back with Balaji.
Yeah. So now Srinivas, our Chief Credit Officer, will speak to you all about the efforts we are putting in to ramp up our business and build up a high quality portfolio.
Yeah. Thank you, Balaji. Good morning, everyone. Srinivas here. Just to give a brief overview in terms of the efforts that we are putting in to improve the credit pipeline. As of March 31st, 25, we are happy to share that while it's a work in progress, there has been a healthy increase in terms of the number of proposals that we are evaluating. We have evaluated in terms of detailed due diligence some 10 to 12 proposals, of which a few have gone for sanctions. The sanctions and rather the commitments that we have as of today are roughly about 500 crores, of which we hope a significant amount of which would be dispersed by this quarter end. Going forward, we will continue our efforts to improve the pipeline of sanctions. We are currently in the process of evaluating 1,000 crores plus of proposals, some of which will definitely be going for sanctions in the coming months. So whatever commitments we have today, while we hope that they will be dispersed by this June end, it will be an ongoing effort to continue to replenish this the commitments that we have in terms of lending. The mix of proposals that we have are across different sectors, which include renewables, roads, conventional thermal, and of course, inquiries are there across in terms of water treatment plants, or in terms of solar projects, or in terms of corporate banking proposals, structured proposals. The ticket sizes, as consciously Balaji has been mentioning from the last couple of calls, we are trying to consciously reduce our average ticket size, keeping in line with our reduced load book in order to ensure that our exposure size is limited till we reach a level where our loan book increases significantly, and thereby our single ticket exposure can also ramp up in relation to that. So we on I think the LPA issue, Balaji has already given a detailed explanation, so there is nothing more to add to that from my side. Thank you.
We will now be opening the floor for Q&A session, please.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vishal Mehta from Oak Lane Capital. Please go ahead.
Hello, sir. You can hear me? Hello, sir. Am I audible?
Yes.
Hi, sir. Just wanted to check what has been the revision in terms of our outlook towards our loan book targets and disbursement targets for the next 2 years?
Like what we would do is we got a very aggressive plan for disbursements of this year.
Okay.
And what we expect to do sequentially, right? We expect to, on a quarter-on-quarter, to have a 7 to 9% growth in AUM on a sequential basis, quarter-on-quarter. So currently, if you can see, our year-ending March 25 is 4,745 crores is the AUM, and every quarter, our AUM will increase by 7 to 9% going forward.
Okay. So, sir, just to follow that up, our disbursements are just, 50 crores for the quarter. So, are we confident that we'll be able to achieve that kind of growth every quarter? Because, even when Sir said that the pipeline is having...
Yes.
It's not a very long pipeline, right? So, are we confident of getting to that number every quarter?
First of all, thanks for asking this question. It's a very important question. See, if you look at that fourth quarter, right, we dispersed 50 crores. There was a particular case we were supposed to give to a state utility, but then we did not disperse because they wanted a renegotiation of rates. We did not want to compromise on our margins while lending. And third, like one of the case which was in the final stage, since we took delay in processing, we lost out that case. So if we had added all these three things, instead of the 50 crores, we'd have come up close to our disbursements having close to 400 to 450 crores. And like what I said, couple of cases which were there in the fourth quarter as
pushed to the first quarter.
Pushed to the first quarter. So what we could say is by the end of next week, by the, say, for example, 17th or 18th of May, already we would have been dispersing close to 200 crores for the quarter. And in the first quarter, we'll be looking at close to 600 to 650 crores. So what we are saying is 7 to 9% on a quarter-on-quarter is confident for two simple reasons. Last quarter, we made a significant shift. We started this shift from the third quarter of last year, where we started focusing more on private sector. Obviously, this is a new for the company to work on this, evaluate this. It took some time, and now the pipeline is strong. That's what is happening. And two, once a new person comes on board, the head of SME, a new channel also gets activated. That will also start contributing. So with this, we are confident that it will happen. I just wait and watch when we are in July to see how our first quarter has been. We'll be completely confident about it. And more importantly, it's not just what we are doing on the ground. There is a greater managerial bandwidth. If you had taken, actually, if you looked till March of last year, there were only Srinivas and me as a part of the senior management to look at all aspects of the organization. Now, today, going forward at this point of time, there is Srinivas, Dilip, and myself. And in the next few weeks, there'll be two other senior people also joining the organization. So that our ability to look at all facets of the business, right from resource mobilization to garnering business, generating leads, then evaluating proposals and taking them through to the logical conclusion, it is a significant increase in the end of quarter one compared to what was there in the fourth quarter. That gives us the confidence. And finally, most important thing, right, there was a lot of legacy issues in the organization. They have been settled properly and we are moving about in a coordinated manner, in a systemic manner. So therefore, the overall efficiencies and effectiveness will also be enhanced significantly.
Great, sir. Thank you so much. That's very encouraging. I also had one more question regarding the spreads. As we've seen, the spreads have kind of tapered off from about 2.5% to almost 1.5%. So one question is, where do you see this settling? And if there are any initiatives that we've taken to kind of improve this, I understand that, we are looking at a rating upgrade and diversifying our borrowings. We've highlighted that earlier, but is there a number which we believe that we want to kind of maintain, below which we're not okay to give out loans, and how? Just if you could share some light on that as well, please. Thank you.
On this, we are guided by three things. First is our emphasis is to build a high quality, low volatility book. So to that extent, while we are focusing on building such a business, automatically the spreads would be lower. Two, if you look into it, the key reason behind the low spreads is the fact that our cost of borrowings is very high. And that cost of borrowings would come down once our rating upgrades happen. So this would start coming down progressively over the next few quarters. But the third thing which is in our control, which we are focusing upon, is to look at the yield on our portfolios. And that's the reason we are focusing on smaller projects, wherein the risk-adjusted return on capital will be significantly higher, therefore our spreads. So answering your question directly, going forward, right, our spreads would be in the 1.75 to 2% range for the next few quarters. But this should not be a hindrance because our leveraging is very low, therefore we'll be able to add significantly. The primary metric that we'll be looking at is our return on asset, which would be closer to 3%, 2.75 to 3%. That's what we'll be doing. We expect the benefits of a cleaner balance sheet with a significantly lower NPA and the larger book size to manifest into better credit rating coming to a lower cost of borrowing. The benefits of it would start accruing from the second half of this year. So the spreads for next year, FY26, will be higher than this year. But for this year, we'll be looking at a spread of 1.75 to 2%. That would be our spread.
Got it, sir. Thank you so much, sir. I'll jump back in the queue if I have any further questions. All the best.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1 now. The next question is from the line of Channa Manu, an individual investor. Please go ahead.
Thank you for this opportunity. Am I audible, sir?
Yes.
Yes, you are. Sir, I'm a very serious investor in this company. I'm holding more than 120,000 shares. So since I am interested to get good dividend yield every year, I invested in this company. Since 2 years, you have not paid any dividend to the investors. That is a very serious matter. And previously, this company was giving very good dividend. And one more question. What is the present status of the new credit line from the different banks? Because the loan book size is continuously decreasing every year. In 2 quarters back only, you said the loan book size will be increased by 15% by the end of this financial year. But what happened, sir? Again, it is reduced. So what it happened, sir? Why you are not serious about this?
First of all, thanks for being an investor of our company. So to summarize, you have asked 3 questions. One is dividends. What is the status as far as resource mobilization is concerned? And third is the AUM build-up. As far as dividend is concerned, that we would like to offer dividends to our shareholders because it's a way of rewarding them. And more importantly, apart from rewarding the shareholders, it is also giving dividends will also give a signal to the market about our future prospects. This year, we were actively contemplated it, but in the light of what has been happening in the recent past few days, yesterday in the meeting, the board took a decision that let's be conservative about it because there's a lot of uncertainty in the marketplace, and since our resource mobilization has still not got back onto track, it's better to conserve the cash to meet the growth requirements of the organization. So that was the call. But if things change going forward, we'll review the thing. As far as the resource mobilization plan is concerned, I will leave it to Dilip to explain what efforts are we doing to bolster additional resources. Dilip?
Yeah. Thank you, Mr. Chairman. So at this, you are right that dividend has not been declared by the company, but you will see that as we discussed that performance of the company, that earning per share, that has been improved. So being a shareholder, that value is already increased at your end. So maybe due to because we have been planning for, that further expanding our this AUM base, and accordingly we are taking up with the multiple lenders, right, in different mix of borrowings as well. So the things are a very advanced stage, right? So everybody was waiting for this now results. Now results has come and there is a qualification free balance sheet. So things are improved, right? So capital adequacy ratio, our this net worth, everything has been improved. So we are expecting that we will be getting the good amount of credit line during this quarter so that we can expand our business, right? AUM base should be increased.
And as far as the AUM was concerned, you are right. When I say we'll expect a 15% growth in our AUM, now instead of the growth, we are at a decline. I would like to just correct you only one thing what you have said. When will be serious? Let me assure you the team, the entire PFS is serious about growing the book. Now, like what I explained earlier, we lost out on a few business. One, because we did not want to compromise on our margins. Two, there was some internal glitch which caused a delay in the processing. So we lost a certain amount of business of close to 400 odd crores. That was one. And two, more importantly, what has happened, has been a surge in prepayments in the fourth quarter. There have been quite a few prepayments in the fourth quarter. As far as this line of business is concerned, while we finance for projects in the infrastructure space, while we originate the loans, it's for 12 to 15 years. But once the project gets commercialized, they start prepayments. And therefore, whatever prepayments which we are witnessing is of the financing that was in a few years back. And since in the preceding 2 years, our disbursements were low, our book has come down. What I would urge you to look at is, while the numbers are low, like in the last year, that is FY25, our total disbursements are close to 60% higher compared to the previous year. And going forward this year, if you look at the guidance that we gave, every quarter we'll have a 7 to a 9% growth on AUM. If you can work out the numbers, this disbursement numbers of this will be significantly more than last year. So what I would like to assure you as a valuable shareholder of this organization is that the bottom of the AUM has been seen, and from now going forward, quarter on quarter, there will be a significant increase in AUM.
Okay, sir. Thank you. What is the fresh loan sanctions from any bank, sir?
Dilip explained it to you. Dilip, please reiterate.
Yeah. So as I already explained to you that things are very advanced stage with the multiple banks. But due to this, because now financials have been audited and that has been available to us, and the qualifications are not there, we are expecting very soon that disbursement will happen.
And previously you said, sir, in one of the NBFCs sanctioned 500 crores. What happened about that, sir?
That's right. IAFCL has sanctioned this. Now, if you look into it, once if we complete the entire process, we need to draw down upon it. As it is, if you can see in our balance sheet, we have already got some 1,200 crores of capital, and on which we are getting a negative carry. So as soon as we exhaust this, we will draw down upon it. But apart from that India Infrastructure Finance Company, we are in heightened stage like what Dilip is talking with at least 2 other public sector banks. Countries' leading banks are there in those. So that will start seeing this after June. Now the reason is, in the fourth quarter, since we have come through a tough time, the financial institution, the banks, wanted to see the annual results completed, and based on the audited balance sheet, they will be taking a call. So that would happen in the next few weeks.
Okay, sir. Okay, sir. Thank you. That's it. That's all from my side.
Thank you. Before we take the next question, we would like to remind the participants to press star and 1 to ask a question. The next question is from the line of Amit Chheda from Banyan Capital. Please go ahead.
Yeah, thanks for the opportunity. Just wanted some clarity on, we are eyeing a 30% increase in the loan book in FY26, right? So how much OPEX increase are we baking in because of that?
I think, Amit, you are using the lower end of 7%, okay? So if you take the 9%, it would be different. See, basically this year, right, the way we are looking at this, we need to fill the key gaps in our manpower. Our primary objective is to look at significant investments in credit, risk, and business development. That is one. Two, more importantly, having a full-fledged management team. As it is, Dilip has joined in March. A new director of operations will be joining in early June, and the head of SME will be joining towards the end of May. So there will be some increase. What I would like to assure you and all the other stakeholders is that we are not a very, very manpower-intensive company. So if you actually look into it, while in percentages terms it could be this high, the overall overhead increase would be around some all put together, increments for existing employees, other office overhead, and each of these things. So overall overhead increase would not be more in employee expenses would not be more than some 8 to 10 crores. The way to look into it is with all these things, even if you are able to generate an incremental 400-500 crore of disbursements for the year, it will be revenue neutral. But obviously, our disbursement plan is significant here. If you're looking at a 30%, 35% growth in AUM, and then obviously the earnings on that would be significantly much more than this. That also on a perpetual basis will be having a significant higher earnings.
Got it. So we are eyeing, say, 30-35% loan book growth. OpEx will increase by around 20-odd%. So then why are we expecting ROA to come down? Currently, it is what, 3.5-4%?
Currently, it's not 3.5-4%, na? Like last year, if you look into it, based on our net worth, it's closer to 7.5%, right?
ROA, sir. ROA. Return on asset.
2.75 to 3%. See, what would happen is when our loan book increases, since the cost of funds is high, so on the incremental leveraging, whatever you do, it will be a lower amount, right? So that is the reason. We consistently maintain 2.75 to 3%. That is the target. Sometimes we will be able to get more than that. That will be fine. But it not come below 2.75 to 3%.
Got it. And what kind of ROE would it translate into?
A finance company is pretty easy, right? You know our net worth, you know our ROA, you can work it out. So let's put it this way. Our entire thing would be two things. Build a book to a significant size, have a high quality so that what track record which the company has had in the sense in the last 7 years, whatever we have lent has not even 1 rupee has become an NPA. We will focus on that, continue the same rigorous credit evaluation in lending, and moving forward, that will ensure that the ROE comes increase. The ROE would be depressed for FY26 and FY27 because of our large capital base. So, but it will be sequentially year on year, and ROE would be increasing by at least 1% year on year.
Got it. Thank you so much.
Thank you. Participants may press star and 1 at this time to ask a question. The next question is from the line of VP Rajesh from Banyan Capital Advisors. Please go ahead.
Yeah, hi. Most questions have been answered. But just wanted a clarification on the commitments that have to come through from the two banks you mentioned.
Sorry to interrupt you, sir, but your line is not clear.
Is it better now?
If you're using a headset, please use a handset. No,
okay,
sir,
just one second.
Yeah.
Is it better now?
Yes, sir, this is better. Please go ahead.
Okay. So my question was regarding loan sanction from the two PSU banks that you mentioned. What is the time on that? Will it be at the end of this, before the end of this quarter, or do you think it will go into the next quarter?
See, we are not in control of that. It will be before end of July. Whether it happens before June or not, we cannot say with certainty. But the only thing what we could say is it's gone up with one bank. It has gone up from the branch office to the head office. Another bank we already had a heightened engagement with at the director levels. So definitely before July, but we expect at least one to happen in the month of June itself. Within the two PSU banks, at least one would happen in June.
Got it. And then in terms of, the prepayments, what is your sense given, you understand the book and some of the projects will be getting commercialized? So in that sense, when you're talking about a net growth of 7 to 9%, presumably you have to disburse even more. So if you can just give some color on what kind of prepayments you're planning to see during this year.
Srinivas, could you just illuminate on what will be the expected prepayments for this year?
Yeah, thanks, Balaji. See, essentially the prepayments that we are witnessing is part of a normal business cycle that happens. I think Balaji had outlined that when he explained the entire position. But today, if we are looking to estimate the prepayments that are likely during this financial year, I would assume that it would be in the vicinity of anything between 200 to 600 crores. We hope it is on the lower side, but it is. I would also request you to kindly appreciate that it could be very difficult to estimate with certainty the likely prepayments. But we have a generally broad assessment in terms of our interactions with our borrowers and the likelihood of prepayments based on the project completion and the maturity of the cash flows. So only a broad range can be indicated, and we would hope that they are on the lower side. And to the extent possible, we'll try to minimize the extent of prepayments from our side also.
Right. So that's helpful. Yeah, I was just trying to get a sense. So it sounds like up to 15% could be something that may get paid. And to that extent, your loan growth has to be right. So that's what I was trying to get a sense.
Yeah, essentially, yeah, that's right. If that's right. To that extent, we have to assume a higher increase in sanctions to take care of the prepayments. So there may be a little lag between the prepayments and our and fresh sanctions. But then, yeah, since we have resumed a normal cycle of sanctions, documentation, disbursements. So and this ramp up is taking place from the last 6 months onwards. So we are hoping to ensure that while prepayments happen, we don't lag behind the extent of sanctions also. So that way, this coming year, hopefully, it will be a much better scenario than what we have witnessed in the recent past.
Right. Just finally, the two people you are expecting to join in this quarter. After that, would you still have some other roles to fill at the senior level, or it will be just pretty much done after that, after those folks join?
By and large, the senior, because we already have a full board. So after that, we'll be having only at the middle and the junior levels. Basically, like what we will be focusing upon is credit, risk, and business development. Because these three roles are critical to generating more revenue by sourcing more cases, assessing them. And we would be adding another 8 to 9 people in the course of this year, the junior levels in these three functions.
Okay, that's all I had, and all the best. Thank you.
Thank you.
Thank you.
Thank you. The next question is from the line of Vishal Mehta from Oaklane Capital. Please go ahead.
Hi, sir. In terms of the stressed assets, we spoke about, getting some resolution done by H1 of the next year, the 26. I had just a question. How do we plan to, utilize the provision? I mean, what will be the impact of that on the financials? Because almost 275 crores of provisions that we've already made will probably become good again. So how is the treatment going to be for the same?
See, one of the things what we will do be very, very conservative as far as provisioning is concerned, because this is an industry wherein whatever we do, the good or bad of it would be reflected 3-4 years down the line. So we'll be having a very, very conservative accounting policy. Now, coming specifically to your query, now what would happen? Let's take, for example, ILFS per se. Now, whatever some of these provisions would come down, it will get reversed. It will possibly add to the bottom line. That's one. And we'd also ensure that if it's there, we would see this increased money that comes as a fresh, unstated sanction sort of a thing. So through this, in this year, we hope to get at least incremental 200 odd crores, which will go towards deployment in future business. But from an accounting perspective, it will be translating into higher profitability for this year.
Got it, sir. Got it, sir. That's it. Thank you so much.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital Advisors. Please go ahead.
Yeah. I ask you about the timeline of the rating upgrades. So if you could just comment on that.
See, rating upgrade, if all of you are aware that ICRA retained it, changed the outlook from negative to stable in the month of February.
Right.
Now we have had our full quarter results. So the rating agencies have acknowledged the improvement we have done in multiple areas. There are two critical things. Having said that, while we have progressed on resolution of the NPAs, the final resolution will start happening from in this quarter, that is the June quarter and the September quarter. So what we expect, like what we were saying, once this June quarter results come out, NPA would have reduced, the book would have increased, and also the sanctions would have been, which are not just sanctions, possibly drawn down from one bank. That will lead to a rating upgrade. So post the June quarter results, in July, we expect a rating upgrade. And this is what we have been informally engaging with them, and that's what we see. It depends on two specific things which we are focusing upon: increase in the book, which we are confident of, and improvement in NPS, which again we are confident of. So in July, we should see the rating upgrades. Anything if it happens prior to that, it's a bonus.
Got it. And lastly, I assume you're not looking for equity raise, or is that still something folks are thinking about?
See, that's something on our mind, because if at the end of the day, like, it's one of the things which we are evaluating to see, because that could possibly give the confidence to the various lenders. So that's something which we are still contemplating. So if any, it would be in a small amount of around 300 to 500 crores. And anyway, that would be at a premium to the current market price, significant premium to the current market price.
Got it. Okay. Thank you. That's all.
Yeah.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. R. Balaji for closing comments.
Thank you all. Basically, we would like to reiterate two things. If you had looked at what we said in the Jan Concall, we have made progress on significant activities in terms of processes, in terms of credit evaluation, in terms of organizational transformation. But the one key metric where our delivery was significantly below what we had communicated was our disbursement figures. Now, what I would like to assure you on behalf of my team is that the disbursement figures have also started going up. When we see the June quarter results, I hope all of you will be pleasantly surprised to look at the quantum of business that we have done. But more importantly, the one key messaging that we would like all of you to have, I would go back to the call in October, wherein we said the focus is to shift away from individual capability to shift towards in building institutional capability. As all of you can see, the management bandwidth has increased significantly. That gives us the ability to focus on multiple issues, right, from resource mobilization to garnering more business. So you would be able to see a new, more aggressive, at the same time very, very conservative with respect to credit PFS going out into the market to garner business. This is the beginning of a multi-quarter transformation, and what we had said, right, we'll be looking at a 7 to 9% sequential quarter on growth EUM. It's not for only the first quarter. This is something we would like to take the organization through over the succeeding few quarters, around 8 to 10 quarters. This would be the plan that would be guiding us going forward. And I look forward to interacting with all of you in July or even earlier when you got some significant updates as far as PFS is concerned. Thank you very much.
Thank you. On behalf of PTC India Financial Services Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.